Deal bringing you a inter-market analysis perspective of the FTSE 100. Obviously, from an inter-market analysis perspective, hoping to see if I can give you an insight as to what's going to happen from Monday onwards, the 10th of November 2014. Okay, so fundamentals, as you always know, I trade based on fundamentals, technicals, and obviously I'll incorporate intermarket analysis, i.e. across asset analysis to confirm and filter out any noise that's left from TA and FA, okay, in order to reduce the margin of error. So basically what we have in terms of fundamentals. Okay, so over the weekend, obviously, with Chinese data come out weaker than expected. Chinese growth concerns obviously remain in the background. Obviously, we've had tapering, so that's the end of QE. Obviously, that remains in the background, with the US dollar obviously moving higher astronomically and remains solid and strong. I mean, I bring up the chart, the US dollar. Obviously, the daily chart we pull back into gap fill, and certainly looking to potentially move higher. Although there are a few unfilled gaps below, so we'll watch out for that. We'll obviously post the US jobs on Friday. It came out weaker than expected. The number I think was 235. Or 235,000 jobs, and I think the actual number was 215. So that's something that we'll certainly take into consideration. But from a terms of tapering, obviously that certainly supports the US dollar, and the dollar itself certainly remains bullish. As you can see in the weekly chart, we've obviously broken out. That's obviously long term. Whether or not short term we pull back to close those gaps below, that's debatable. Okay, so given the fact that obviously the end of QE is obviously dollar positive obviously is hurting commodities. I mean, you can look at your chart of a CRBQ and observe your commodities there. You can look at a chart of CCE, even look at a chart of the Baltic Dry Index. You can look at a chart of the XLE. And basically all these are indexes telling you the health of commodities. I mean, I can bring them up for you. Okie dokie, here we go. So I mean, one of the ones that I always tend to watch is GCC. So you got CRBQ daily chart, and obviously GCC certainly making a new low, obviously coming back to retest the previous breakout. So everything certainly isn't looking well in terms obviously with Chinese data over the weekend being weaker than expected, and commodities will come under further pressure as well, given the fact that oil price has been declining. So if you look at commodities, it doesn't look very healthy. If you look at the obviously the currencies, the Aussie and the Kiwi have been hurt. Although there was a pullback on Friday, or reversal Friday, certainly pushed higher. So they certainly seem to be under pressure as well. And there'll be obviously even more pressure with this Chinese data obviously coming out worse than expected. So that's the concern. Now we've got concerns with regards to Russia and Ukraine over the weekend again. There's talk. I mean, I've just been talk about expanding military presence in rebel-held areas. So Ukraine's accusing Russia again. Then we've got Reuters with regards to a story of Mr. Obama sending extra troops to Iraq. Obviously, the ISIS situation. The reason why he's sending that is because he can't control it. So okay, that doesn't bode well for him. Okay. So obviously political uncertainty, given the fact that the Republicans are in power, and what that means going forward. That's certainly a concern as well. Even though they do claim to be pro-business, there's certainly some sort of disillusionment there. Okay. Now, so weak economic data out of the UK as of late, hence the reason why sterling certainly moved lower, given great expectations. Okay, so an array of obviously bearish news from my perspective. So first of all, Chinese data weaker over the weekend. We've got geopolitics, or Russia, Ukraine, and obviously Iraq. That story will certainly obviously dominate, and obviously that's going to hurt sentiment itself. Okay, given the fact that the Japanese QE blitz has certainly underpinned the markets and held the market afloat, we must consult the yen. Okay, and the yen itself seems to be basing, as you can see here on the 60-minute chart. This is the yen chart, and as you can see on the daily chart, you've got a doji. So two dojis plus a bottoming tail means that the yen is potentially into support now. If the yen is into support, as you all know, those that have studied and taken my mentoring class, which I do, I also mentor students, by the way, on a one-to-one basis via Skype. Those of you that know that when the yen starts to base and starts to make a potential support, to propel itself higher, given the fact that you've got two unfilled gaps above. If you look at a 60-minute chart, you've got an unfilled gap there, you've got an unfilled gap here, so it potentially means risk off. Okay, so risk off, if that's the case, then expect indices to come under pressure. Okay, so that's basically what we are dealing with at present. Okay, so adding the fact that obviously the Eurozone economic data out there still remains weak. Draghi talking about ABS but not actually doing it. Keep stating that there's unconventional tools that you can use and so on and so forth, but nothing's really been implemented. And obviously the Germans are certainly against QE as well, even though ABS is certainly in motion. So we'll see whether or not that plays out. But given the fact that the European indices have reacted negatively post Draghi, okay, although they did rally going into Draghi, but after Draghi they certainly did top out and obviously reverse. So that's something that we need to take into consideration as well. So if you look at the German DAX, for example, your daily chart is a bearish engulfing candle. Obviously we failed at the 75% fib near the 200 MA, and we've got an unfilled gap below. So we'll see exactly what happens. I mean, I'm not forecasting the future by any means. All I'm saying is take this into consideration. Now, when you have a 60-minute chart on the German DAX and it's telling you that there's a HNS formation, and a daily candle gives you a bearish engulfing candle, and you have a bear flag in motion, and you have a failed bull flag, which obviously we negated this green candle, this bullish engulfing green candle, obviously expectations, or should we say when Draghi spoke, okay, everything rallied after he spoke, and then obviously thereafter it sort of tapered out, given the fact that obviously we all know Germans are vehemently against any form of QE. So basically when the German DAX is obviously bearish, you have unfilled gap here, unfilled gap here. That doesn't bode well for the European economy or European market, shall we say, and that obviously in turn doesn't bode well for the FTSE 100 itself. Okay, so excuse me, it's been a long day. Okay, so we've obviously broken out of this you can call it contracting, rising wedge, etc., etc. Basically broken out of that channel, and certainly a bear flag scenario, and obviously down we go. And the German DAX is reliant upon the Nasdaq. Now I am digressing here, but I do think it's important to give you an insight of how I think and my thought process. Now, if you look at the chart of the Nasdaq, what do you see there? Classical bear flag. Okay, bear flag pattern, unfilled gap below. So what does that mean? It means that gap must close. So not only is that gap there, there's also a gap below, but it's a lot to ask in terms of closing the gap below, because obviously the Japanese yen has been absolutely butchered as of late, and obviously USD JPY is the Kool-Aid or the stimulus trade, and basically that's what's propelling US markets to new highs. Well, given the fact that obviously the pension fund in Japan is obviously doubling their exposure to global equities, and it more than likely will be US markets that will catch that, given the fact that they are steaming ahead in terms of Europe and Asia, so in terms of growth and stabilization process. So basically we have a bear flag scenario for the Nasdaq, okay, and that more than, I mean, you can call it the Apple DAC. Okay, so focus on Apple. I don't want to make the video too long. I'll obviously dwell upon Apple when I do a US market analysis. So given the fact that the Nasdaq is dependent on the DAX upon the Nasdaq, the DAX dictates the movements in Europe, and the FTSE is reliant upon the DAX, then if you see weakness in the Nasdaq, that equals weakness in DAX, which is confirmed with the HNS in the 60 minutes and the bearish engulfing a daily candle. You have a bear flag scenario on the Nasdaq. Okay, I can go into semicons and biotechs, which you can, if you observe yourself, you'll see there's weakness there. That means that there's weakness for Germany. Weakness for Germany equals weakness for UK. Hence the reason why I'm using intermarket analysis to come to this conclusion. Hence the reason why I expect a sell-off come Monday and going into early into the week. Obviously, if there's any stimulus, any government intervention, that's obviously bullish for the markets, etc., etc., etc. Then the scenario and the bias will change, and I have to adapt accordingly. And that's why I'm a day trader. Okay, that's basically what I do. I adapt, I react. Okay, yes, I can preempt to a certain extent, like I'm doing right now, because I have the information, the knowledge, and the understanding, the insight, the hindsight, foresight. Call it what you want. This is the essence, and this is why Mr. Paul Tudor Jones, or people like Paul Tudor Jones, and people like George Soros, okay, were so successful, and remain successful if you follow their ideology, the thought process, think how central banks think. Which again, something that I was talking with Anna Cooling on the Friday yesterday when I went to visit her. We were discussing, and we were just discussing the fact that a lot of these so-called city traders don't have a clue. They're literally desk monkeys, and they've been trained to push buttons. They don't know. They don't understand the underpinnings of the market and how the market operates, etc., etc. And even your average retail trader as well, all he has is one chart, and he'll just focus on that chart. You look at a 5-minute, a 10-minute, and he'll just keep scalping the market, irrelevant and absolutely unfazed or uneducated with regards to what happens, or the movements in the markets and why the markets move. Obviously, you have the bond markets influencing the equity market influencing the commodities market, and then obviously the forex market. This is what Mr. Murphy's book of Intermarket Analysis expands upon, and obviously Anna Cooling has obviously toned it down or dumbed it down so the average individual can understand and comprehend it as well. But it's an art and it's a science that needs to be learnt and applied in the correct manner. Okay, and there's a methodology. Obviously, there's a learning process involved as well. But I think personally, intermarket analysis gives you the ability to adapt to a market. Okay, because it's not a process that's ingrained and is unable to maneuver and remain stubborn in one thought process. It's constantly evolving. So, for example, when we had QE1, QE2, QE3, it was all about the dollar. So Euro USD was the prime trade that we all observed, and obviously the markets moved. And also Anna Cooling was talking about the Euro JPY, but just recently, or the last 2 to 3 years, it had lost that relevance until obviously Mr. Abe and Mr. Kuroda came along, and obviously propelled that into the key risk barometer trade along with the USD JPY. So it's all about observing the yen. So whenever the yen bases and starts to move high, the stock market moves in the opposite direction. So it's almost acting like a potential VIX. So it's interesting times. We just have to adjust. We have to move. Then after Japan is done, it will all be about the euro. So whenever even I think that's already come into effect. Whenever the euro drops, it's positive for European equities and positive for global equities. Okay. So obviously it's a stimulus type effect, and obviously when QE really comes into effect, then you'll see everybody observing the Euro USD, and that will be the key risk barometer trade. So everything's constantly changing, and me and you, we have to change. If you don't change, then the market will change you, and it will change your profit and loss, and it will change you to basically leave trading altogether. So you have to be very, very flexible and adjust yourself accordingly. Okay. Right, so I think I've digressed enough there. Now let's get back into technicals. Okay, so the theme that I've painted from a fundamental perspective, as you already know, is bearish. Okay, so having said that, okay, and there'll be many more reasons when we come Monday. I mean, Monday morning, by the time we get to Monday morning, we may have weaker earnings from some of the FTSE companies. It could be some other rumor or some other and this is generally what tends to happen. Is when you have a technical setup that's bearish, which is confirmed with a few fundamental variables that are bearish, then all of a sudden it's a plethora of additional variables that are indicating to the downside, and that might occur at that very moment in time, or whilst you're in the trade, you'll get even more. Okay, so that's all part and parcel of the way in which the markets work, and it's kind of spooky at times. Anyway, so. Technically, okay, so now I've given you an insight slightly there with regards to intermarket analysis. Now let's look at the individual indices that we're talking about. Okay, so FTSE 100 horizontal resistance has held, the FIB 61% retracement has held, the 50 MA has held, and the topping tail has been created. Okay, a topping tail has been created. So look at the 4 technical reasons. Number 1, horizontal resistance. Number 2, 61% FIB retracement has held. And number 3, 50 MA acts as a semi-resistance tool, although the 200 MA is your key. Okay, and obviously a topping tail as well. Okay, so topping tail. Now, yes, we do have an inverted head and shoulders, and the target is 6770, but that doesn't mean that we can't pull back. Okay, so be flexible. Okay, yes, am I swing trade long the FTSE? Yes, I am on the fundamental analysis service. Am I day trading the FTSE long? No, I'm not. I'm looking for a short. Okay, so I'm looking at 30, 40, 50, 60 point pullback before we start to rally again. Okay. So that inverted head and shoulders still remains active, and obviously that target of 200 MA and above certainly remains active for me as well on this fundamental analysis service. If you want to join the fundamental analysis service, just email me and I'll add you on there for free. I'm not charging anybody for that at all. Although the live analysis service, which is day trading, I do charge £50 a month. Okay, so you are more than willing to take a 1-week trial. Just email me, send me a number, make sure you've got WhatsApp downloaded, and I'll add you on there for a 1-week trial. If you want to continue, then obviously it's £50 a month, and that's if you want to learn in real time. It's an educational service. Okay, I'm not here to make points and pips. Yes, that's a side effect, obviously. I've been nailing an average of 200 points a week for the last 10 years on the service. But the main reason why you should come is to educate yourself and look at the way in which I trade, and my entries, my exits, my obviously my commentary and my analysis, and study that and realize how you can do it yourself and become independent traders. Okay, that's the whole thing. When I was trading, that's what I always look for, is how another trader succeeds and what's his thought process and his TA setups and his fundamental setups and what news flow he reads and the way he thinks and the way he acts, the way in which he operates, the time, etc, etc, etc. And that's basically what I offer. I offer my trading experience in real time because I'm a full-time day trader, and there's no better way of learning, and it's the most cost-efficient way of learning at just £50 a month. I wish I had something of that nature when I was learning how to trade, when I was in my early stages. So that's basically what I'm doing. I'm just helping other people out and giving my insight in the most cost-effective way. There's no need for some of these courses. I went to this money show, and some of these courses are ridiculous. I mean, 4,000, 5,000, 10,000, 15,000, ridiculous amounts of money they're paying. So I try and make it a very easy way in which people can digest the news, digest the information, and obviously relate to it as well in real time. Okay, there's a lot of cowboys out there giving you blue pleated trades, which I seen again on Friday, and it made me cringe. Okay, talking about people starting with 3 grand, novices taking it to 50 grand. Complete, absolutely ridiculous. Okay, it's a painstaking procedure trading. Okay, there's a lot of battle scars involved. There's a lot of lessons involved. You take your hits. You make a lot of money as well in terms of trades, but it's a long-winded process. It's a battle within. Okay, the psychology involved, the personality a certain individual has to inculcate, the patience, the perseverance, steadfastness. How can I explain it to you? I mean, it's just the emotions that you go through of once you get into the top 5%, etc., etc. is very, very hard. It's not easy. It's not as easy as taking one little mentoring package and all of a sudden becoming an elite trader overnight. It's a process. So that's why I do the mentoring for 4 weeks, and then I encourage individuals or students to go onto the live analysis service, because everything that you've learned, you want to now put that into practice, and obviously the live analysis service is the ideal way of doing it. I mean, there's no better way of learning from somebody in real time, and that's exactly what this chap was, who was attempting to teach individuals to be successful. He had done that himself. He'd sat with one of the best, or some of the best traders in the world, and just watched them trade. There's no better way of learning than watching somebody trade, from my perspective anyway. Everybody has their own, obviously, interpretations and obviously opinions, so that's fine, but that's probably the best way of learning. I mean, you can read as many books as you want, watch as many videos as you want, until you actually do it in real time. There's nothing that can compete against that. Okay, right, so going back to technical, so I've explained the technical arguments there on the daily chart. Okay, so looking for a pullback based on those technical arguments. Okay, now this is obviously confirmed by the DAX chart, which I elaborated upon. Okay, and the Nasdaq chart, which I elaborated upon. Hence the reason why I call it intermarket analysis, because you're reducing the noise. Okay, so when all 3 different asset classes are all pointing in the same direction, and all in different time zones, and different, obviously, with different cultures, different backgrounds, different variables that make them tick, etc., etc., then it reduces the noise, and you know that there's a potential risk-off scenario. Okay, so let's have a look at the FTSE 250 now. FTSE 250 previous support equals resistance, as you can see here. So this level is key. This level here at 15,600, 15,580. You can see here resistance. You can see here resistance. You can see here resistance. Sorry, support, resistance. Okay, and then obviously support again, and now is acting as resistance. Now previous support equals resistance. So that's basically what we're looking at from that perspective. Yes, we have an inverted head and shoulders formation, don't get me wrong, but we've had 2 failed bull flags. So we've tried to consolidate, move higher, we've failed. We've obviously pushed higher. So usually it's classed as a bullish continuation pattern, but this is a very weak pattern. Okay, so add that in with the DAX and the Nasdaq, it certainly doesn't bode well. Increases the probability of it going down. Add that in with, obviously, the fact that the FTSE 100 is into resistance, then this doesn't bode well, and looking for a potential move in the opposite direction, especially given the fact that We've had weak data, okay. We've had weak data out all week from the UK, okay. Now you can look at GBP USD because this will be an interesting insight given the fact that the FTSE 250 companies are heavily reliant on the currency exchange. So we can certainly have a look at that and see exactly where we are with regards to that. So let's have a look at a daily chart. Okay, so we certainly seem to be making a base here. Okay, so this is just some analysis that I've done. Not looked at the just get this up, clean this up for you, and certainly give you an insight here. So we certainly seem to be making some type of base here. Okay, so for the for sterling. Okay, so let's see what happens with regards to this. So given my understanding of intermarket analysis, given the fact that we've obviously held that key trend line there, my intermarket analysis is given the fact that the FTSE has an inverse relationship with the sterling. Okay, well, not 100% inverse relationship, but there certainly is valid and it's certainly there. Then basically what I'm trying to get at here is the fact that this is potentially going to hold as a potential double bottom. Okay, and will certainly push higher. Okay, so for sterling, so this will be interesting. Obviously, I don't know the variables as to what will propel this higher, other than the fact that you can argue, okay, yes, given the fact that we've had a weaker jobs report out of the US on Friday, then given the fact that the average hourly earnings were weak as well, okay, then that obviously bodes well for sterling versus a dollar. So rather than it being sterling strength, it will be dollar weakness. Okay, that will propel this higher. If that's the case, and if GBP USD goes higher, then the FTSE 250 will come into resistance. So just bear that in mind. Okay, so the key trend line that we're going to be looking at is this here. Okay, diagonal trend line, we're holding that support. If obviously this candle gets negated, then yep, bang, off we go to the races on the upside. So this will be very, very interesting. Okay, obviously keep an eye out for Mr. Carney. He's forever changing his opinion and his mind, so we observe that. Okay, so that'll be very, very interesting. Right, okay, so let's go back to the FTSE then. FTSE 350, just a confirmation. Actually, the volatility index, this is good. Okay, so given the fact that obviously the volatility index has an inverse relationship with the FTSE 100, so based on that obviously premise, then if we utilize our TA skills, as you can see here, we've put in a bottoming tail intraday, and that bottoming tail obviously is at horizontal support. And given the fact that we've put in a bottoming tail plus we've held this key trend line, then that means that this index will move higher. If this index moves higher, what will happen to the FTSE? Obviously, it will move lower. So this adds weight to the argument of the FTSE 100 moving lower going into next week. Okay, so bear that in mind. So the FTSE 350 again, same thing. You've got a potentially topping tail again. Obviously, we failed around just around the 61 to 75% resistance. Previous support equals resistance line as well, 50 MA. Okay, we're looking at a retracement of 61% resistance again. Okay, we do seem to be making a inverted head and shoulders pattern here. So watch out for this. So left shoulder, head, right shoulder now. So looking for potential consolidation here before we do eventually break out. That's going to be interesting. Okay, and the only reason why we break out is if commodities start to catch a bid. And the only way commodities start to catch a bid is if the dollar starts to fall. And that's going to be very interesting. Okay, so there's a lot of, what can we say, potential scenarios. It's like a game of chess. Is when you play your opponent in a game of chess, you look at all the potential scenarios, the potential outcomes, and the potential moves he can make, and you can adjust accordingly. Yes, okay. So very, very important. So that's what we're looking for. Inverted head and shoulders, looking for that particular pattern to play out. Okay. Righty then. So that's basically the indices. Okay, let's have a look at the smaller time frame now from a daily chart. So looking at multiple time frame analysis, and this is going to be very, very interesting. Caramba, it's not saved it. Okay, let me just do this again. Okay, so I was doing some mentoring before and I've obviously lost it. Okay, so obviously we know about the inverted head and shoulders 6670 target. Obviously we didn't get anywhere near that. That target certainly remains in play. What's interesting for me at this very present juncture is this pattern here. So watch out for this pattern to play out. So you have a bearish engulfing candle in control. Okay, your left shoulder is here, your head is there, and the head was a failed bull flag. Can you see how that green candle opened higher? We consolidated, we failed to propel higher, so the bulls lost control. When the bulls lose control at the head of a head and shoulders, that's very, very significant. Okay, now that we've got a bearish engulfing candle and we're consolidating within that red candle, look for a potential move lower. So that's your H&S target, or H&S pattern there, right there. Okay, so we're looking for potential downside on this H&S. Let's have a look. this video is getting very long. I try my best, folks, to keep these videos very short, but the problem is when you are constantly reading and constantly analyzing and constantly observing the markets, then you have a wealth of information in your brain, in your cognitive thought process, shall we say. So, and that I tend to go into autopilot. So I don't understand what well, I do understand what I'm saying, but basically it's just I talk too much, and I try my best. Honestly, I do try my best to keep these videos very, very short. Maybe some of you appreciate the fact that I'm actually thinking out loud and just constantly talking and giving you my thought process, because that's what I'd like to know. If I was a rookie or a novice trader or intermediate trader, how somebody who obviously has the ability to consistently trade and make profit from this market, how he thinks, so I can think that way, or I can try and follow the same train of thought and try and inculcate that in my trading. Okay, so basically we have HNS formation. So as you can see here, bear flag, bearish candle in control, obviously following candlesticks within that candle, boom, down we go. Obviously the pairs are in control. We had a bull flag, failed bull flag, that created a head. Now a failed pattern always creates an emotive move in the opposite direction, which my teachers at InTheMoneyStocks.com, Gareth and Nicholas, always taught me. Okay, so always be sure to check out that website as well, InTheMoneyStocks.com, for your technicals. Okay, so basically we're looking for a move lower, a failed pattern, obviously emotive move in the opposite direction. So you have an unfilled gap below, which, I mean, it's not a coincidence, folks. This is TA. Although they do accuse of TA individuals of being voodoos and witches and trolls, etc. We'll call it what you want. It's a science, okay, which obviously certainly is being respected. Now, okay, so unfilled gap below. Unfilled gap is at 64450. So 6450. So watch out for that. Okay. Like I said, geopolitics isn't good. Okay. 1,000 Israeli Arabs protest after cops shoot and kill. So Israel-Palestine situation is obviously a slight boiling point at the moment, given the fact that Israeli Arabs have started to protest, which they haven't done for years. It's always been the other side of the equation, because the Israelis, their aggression and their apartheid process and their racist, very, very racist and very oppressive regime, suppressing Palestinians, and no wonder why they go to extremes. So there's extremes on both sides. I don't condone any of the Palestinian actions and what they do, because it is extremist in nature as well. So that certainly needs to be tamed and controlled. But Israel certainly doesn't help the situation. It certainly aggravates it. I'm sure it can do better than that. Okay, so by killing an innocent individual, even though he was armed with a penknife, I think there's no need to shoot that individual point blank, and obviously that's certainly not improving the situation there. So given the fact that there's a protest going on there, and also there's a situation in Ukraine, Russia, that's certainly starting to trigger again. Then you have obviously Iraq situation. So there's three areas well, basically geopolitical concern. Okay, and that obviously will not be bullish for sentiment. That's certainly not sentiment going into Monday. Given the fact that obviously the yen is into support, the dollar is certainly circumspect. The dollar could get catch a bid on that. Oil price may well catch a bid on that as well, possibly, potentially. So we'll see exactly how it all plays out. There's so many different scenarios that I can potentially discuss. But from my perspective, weaker jobs report will certainly take obviously center stage from the US. That will knock sentiment. Okay. Given the fact that weaker economic data out of the UK, that will certainly knock sentiment. As you can see, it already has, with this 60-minute chart giving you an indication of HNS formation. Okay, so watch that and observe it, and also keep an eye on the Euro JPY and USD JPY as well. Okay, so we're at this point here. Okay, so now let me just update this chart as well, because it's a right mess right now. Okay, let me just organize all this for you. Okay, so give you a clear and understanding. So obviously we close this gap here, the market opened here, market closed here. So I use my gap levels as potential support and resistance as well. Okay, so basically what do we have here? So right, so we're just going to connect this trend line. This would be a key trend line. So if you get any pop above, then obviously this will be your resistance zone. Okay, so we basically have the HNS formation here for you. So Same thing on the 60-minute chart. Obviously, there we go, bang, 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 and down we go. Okay, so that's basically what we're looking for. And 10-minute chart, same as 60-minute. We've got an unfilled gap below. That's not going to be of any assistance at all. So it's all about this gap at 6450. So watch out for 6450 next week, folks. Okay, so we're already at 6560 region. Depends when the market's open. So I'll be short, looking to play this pattern. The initial support will be seen at this level here, 6530. Also, you have a key support zone here where previous resistance will potentially equal support. Watch out for that 6540 level. That'll be a key support zone. We do have this level here also. This is going to be a key support zone as well, which is around the 6500. And obviously 6450 will certainly need some real powerful catalyst to trigger that off. The only thing I can think of is the yen potentially catching a bid and moving quite higher considerably. So, and there are concerns with regards to Japanese yen, obviously, given the fact that China and its trading partners are certainly not happy with it, and given the fact that Europe is not happy in terms of losing trade elsewhere. So that's certainly a concern as well. So we'll see. Like I said, there's a lot of permutations in this market right now. We can, it can move either way. Arguments for and against, but overall, the dominant theme means, from my perspective, is that we're certainly bearish, and we're looking for weaker prices. We may even get a gap down in Chinese data over the weekend. That's come out weak, so that's basically what I'm looking forward to next week, folks. That's your FTSE 100. Watch out for the H&S formation. That's basically it, and watch out for that gap at 6450, support at 6530, 6540, and 6500. Okay, so risk on, risk off, wax on, wax